Hey everyone, welcome back. Hope you guys are having your Wednesday. So the CPI data came out today, which was better than expected, which is great. But then now the Fed has a kind of quandary to go over. Do they raise rates at the end of this month or do they hold off? We'll get into that, obviously. Then the markets were up today. Bitcoin was down today. Ethereum was down today. Miners were mixed today. And then we'll also take a look at two stories that we have. Hive changes their name. We'll talk about what that actually means. And then we'll also take a look at Argo's production updates for June. Okay. So as always, you guys know the drill here, not financial advice for entertainment only. Please do your own research. And I'm investing in the following coins and companies for full disclosure. If you enjoy this type of content, hit the like button, subscribe, helps me out tremendously. Let's take a look at the markets here really quick, see what's going on there. And we can see here that the S&P was up today 0.74%, Dow Jones was up 0.25%, NASDAQ was up 0.58%. Okay, Bitcoin was actually down today. It's down a little bit right now, but it was down today. Let's see here, it was down 0.8% on the day right now. It closed at 30,381. We're still trading sideways, really kind of bouncing off of the 20-day moving average here, which is our yellow line here right now. We'll have to see where it goes. There's really no direction here that we know of, which way it wants to go right now. We do have that Fed meeting here on the Wednesday, July 26th. That's going to be decisive for us. Like we said in yesterday's video, every time we had a Fed meeting, prices have gone down in Bitcoin. So we'll see if that's going to happen again or if the Fed's going to pause again. So we'll look at that data here in a little bit. Ethereum, on the other hand, was also down today, as was the miners were kind of mixed, like I said, but Ethereum was down 0.37% today, closed at 1,171. And it is right now trading right on that 20-day moving average as well. Okay. Now let's take a look at the miners here really quick. Annie was up today 0.38%. Argo was up nice today. It was up 25.42% on the day. Bit Digital was down 5.6% on the day. BitDeer was down 5.63% as well. And then we got Bitfarms was down was up 1.1% on the day. And it's been doing really good here lately. Cypher was up 4.95% on the day. CleanSpark was up 3.12% on the day. Oh, why is my internet so slow today? Maybe because of thunderstorms. We had a bunch of thunderstorms roll through here today, so maybe that's why. Core was down today, 10.85%. So a little bit of a pullback from where it was yesterday. And DigiHost was up 9.27%. DMG was up 2.3%. And Greenidge, that just went wrong on me. Greenidge was up 2.17% today. Hive, okay. Be that way. Okay, we'll do it manually. Hive was down today 4.55%. Hut 8 was flat on the day. Iris Energy was up 3.11%. Marathon was down 3.05%. Lawson was up today 1.42%. Riot was up 0.8%. Soluna was up 10.22%. And Stronghold was down 2.53%, along with Wolf down 7.04%. And we'll see if my internet if it stops. Right now it's not loading, so we'll see how it goes. Okay. All right, so that's it for the miners. Like I said, it was a mixed day for them. Let's take a look at the network hash rate really quick as well. See if we can get this reloaded. Okay, on the 7-day average, we've peaked a new high here. So we're at 399 million terahashes right now. And on the 1-day average, let's see, we peaked and then we came back down, it looks like, to 339. So if we look at the 7-day average, we are definitely hitting new highs here as it is. So miners are definitely getting installed for some of the mining companies out there. Okay, we'll keep an eye on this. And let's get into our stories here really quick that we do have. So the first one is going to be on, obviously, the inflation. Consumer prices in June rose at slowest annual rate since March 2021, sorry. So consumer prices rose at the slowest pace since March 2021, as inflation showed further signs of cooling in June, which is great. The consumer price index CPI rose 0.2% over last month and 3% over the prior year in June, a slight acceleration from May's 0.01% month-over-month increase, but a slowdown compared to the month's 4% annual gain that we had in May. So both measures were slightly better than economists' forecast of 0.3% of month-over-month increase and a 3.1% annual increase, according to data from Bloomberg. So that was good there. On a core basis, which strips out the more volatile costs of food and gas, prices in June climbed 0.2% over the prior month and 4.8% over last year. Both measures were also slightly better than economists' expectations, so that's good there. Okay, going down here, the shelter index, which jumped 7.8% annually and 0.4% between May and June on a seasonally adjusted basis, was the largest factor in the monthly increase of core inflation, accounting for over 70% of the increase. So that's, if that comes down, that would be even better. And then down here, Ryan Sweet, chief U.S. economist at Oxford Economics, added, the Fed has painted itself into a corner as Fed's officials' communication has signaled that another rate hike this month is essentially a slam dunk. However, the new data could give the Fed reason to debate whether any further rate hikes after this month are needed. And I'll talk about this in a second here. And immediately following the release of the data, markets were pricing in a roughly 90% chance the Federal Reserve raises rates by another 0.25% or 25 basis points at its July 26 policy meeting. So we have that marked on our calendar here on our chart. We'll see how that goes. But here's what I want you guys to take a look at. So obviously we know that Bitcoin is going to have, I marked it here when that's going to happen. So something to obviously pay attention to here. But if we look at the U.S. Inflation rate, this is year over year. We peaked pretty much here in June of last year. We were at 9.1%, which was really high. We're obviously at right now at, well, it's showing May here. May is at 4. We don't have the latest data here for June, which was at 3%. But the thing that I'm seeing here is we're seeing more and more of a decrease in the drop in percentage inflation rate going into the last couple of months here that we've seen. So we were at 4.9 in, when was this? This was in April. We were at 4 in May, so there was a decrease of 0.9. Now we have a decrease of 0.1 base or 1% decrease in June. Prior to that, let me see here, we had 6 and we went down to 5. So we had a similar decrease here, a little bit of a lower decrease here. But the way I'm looking at it is, if I was the Fed and you're seeing this kind of data that, you know, inflation continues to go down, even though you held on to not raising rates in June, I would probably pause here. Why not just pause, see where things go in July, maybe even in August. If they continue to come down, you might be able to get a soft landing out of this. If not, we might be heading into a recession, and then they're going to have to obviously, one, drop interest rates. Hopefully, they're going to probably have to do that pretty quick to get everything turned around back to going the positive way, and they're going to kind of trying to balance the 2% that they want. So it's going to be tricky for them. I would just wait off. That's just me. Let me know what you guys think. But I think just waiting right now, there's no real reason why not. You're at 3%. You're trying to get to 2%. Let's see what the numbers come in for July, and then you can maybe make a decision whether or not you want to raise another 25 basis points or not. Okay, but that's just my 2 cents on that one. And let's take a look at the next story that we have here. So the next story is going to be on Hive. Hive Digital Technologies debuts new name and strategic expansion to power the future of artificial intelligence with our NVIDIA GPU cards. So they have a lot of those cards that they purchased back in, I believe it was back in 2021. They had a bunch that they owned previously to that. But obviously with Ethereum going to proof of stake, that has not worked out that well for them at the end of September of last year. So now they're focusing more on the AI part of it. Okay, I'll give you my 2 cents on this as well. So Hive today officially becomes Hive Digital Technologies to better represent the company's evolving focus on the revenue opportunities with our NVIDIA graphics processing units, cards in cloud compute technology, and its mission to drive advancements in artificial intelligence, applications such as ChatGPT to support the new Web3 ecosystem. Okay. Hive, while maintaining a strong presence in Bitcoin mining, intends to utilize its robust 38,000 NVIDIA GPU fleet for computational tasks on a massive scale. In addition, the company plans to branch out into the rental of GPU server clusters via marketplaces and the development of its new services, Hive Cloud. This cloud service will empower users with access to virtual instances of a single GPU, a bare metal server equipped with up to 10 GPUs, or even clusters of multiple servers to provide an array of computing power. Hive Cloud aims to provide small and medium-sized businesses with an efficient and cost-effective alternative with substantial savings from major cloud service providers. Okay, so that is all great and good. Here's my 2 cents on this one. If I was a software developer or anything like that, having to do with creating software that's going to be using AI, you have basically offerings from Google, Microsoft, Amazon, or probably your like top 3 primary sources that you go to. The reason you would go to those guys is because you can have your app basically run on their services, and you can develop applications for Apple, OS X, and then, for their mobile platforms as well, for iMac and, not iMac, geez, iPhone and iPad. You can do applications on that. You can also build applications for Android on it and use all the different services that you have through Google, Amazon, and Microsoft to build on top of it, where they already provide the GPU clusters that you can have to it. You can have databases to it as well. You have all this infrastructure that's in play already. I don't know how much this is going to be of a boom to Hive doing this. Me personally, being a developer, if I was a developer, I studied computer science, information systems. I would probably go with one of those three instead of going with somebody like Hive or Hut 8 because I have all of those other infrastructures that I could access as well. Now, if they're going to be doing this and they do build out those other infrastructures where you have database, you have other things, web services, other things like that, okay, then that might make a little bit more sense. But if you're just providing people with access to GPU servers to run calculations and things like that, that might be more of a educational part of the business part of things. Government as well as doing, mathematics and things like that, charting, AI and things like that, where they just need space for a little bit. And they do their calculations and they're off of it, and that's it. Other than that, I think a lot of people are going to be going with, like I said, Amazon, Microsoft, and Google for those services. And we'll just have to see how this progresses going forward. I don't know if this can be a big money-making thing for them. I hope it is, but I don't think it's going to be, unfortunately. I think it's going to be something that's going to be a little bit more, what's the word I'm looking for here? Revenue that's going to be a little bit more stable than Bitcoin mining is right now. Bitcoin has obviously its peaks and valleys, depending on where we are in the cycle, in the bull cycle, bear cycle, and things like that, and the halving cycle. With this, I think this might be a little bit more sustainable, long-term revenue for them, but it's not going to be as great as Bitcoin mining is, okay? Let me know if you guys agree or disagree. And this one, and finally, we'll get into Argo here. Argo provides their June operational update. This is going to be a pretty quick one here. Now, with Argo and the way that they've been operating here the last year, I'm a little concerned for them how they will be after the halving event come next year. Okay, and I'll give you guys the reasons why here in a little bit. So during the month of June, the company mined 139 Bitcoins or Bitcoin equivalents, about 4.6 BTC per day. This is a decrease of 17% from the 5.6 BTC per day mined in the previous month. The decrease was driven by a higher average network difficulty in June compared to the prior month, as well as an increased curtailment of mining operations at the Helios facility in Texas because of the heat and everything else. We're seeing a lot of that happening with Marathon, Riot, and others that are in Texas right now. While the curtailment reduced the number of Bitcoins mined, the company expects to receive additional cash proceeds from certain power trading activities undertaken by the operator at Helios, which I believe is, what is that facility? I can't remember now right now. I know which one it is. It's Mike Novogratz. Galaxy Digital, I believe, owns it right now. So we'll see what that comes up in their quarterly results. And then as of June 30th, the company held 44 BTC. While the company's total hash rate capacity continues to be at 2.5 exahash, that's been pretty much there for almost a full year now, which is a shame because they did have pretty good expectations for growth last year, but obviously with the bear market and Bitcoin price coming down, they had to sell some of their assets and things like that to survive. Okay, so the company has begun receiving and installing new block miner machines at its Quebec facilities. Once fully deployed, these new machines are expected to increase the company's total hash rate capacity by 12% to approximately 2.8 exahash, so basically a 300 petahash increase in that. Not a big increase for them. In order to survive, I think they have to really grow and grow a lot here and really fast within the next possibly 6 to 8 months before the halving event happens. Are they going to be able to do that? I don't know. Okay, but let's take a look at the numbers that I have for them, and then I'll discuss why I think they might be in trouble come after the halving event. Okay, so here's Argo. 47 million shares outstanding right now. The stock price is at $2.22. Market cap is 106 million as it is right now. Current hash rate is at 2.5. They're saying that they're going to get to 2.8, another 300 petahash increase in that. Okay. As far as the performance has been in the last 12 weeks, you can see here 12 weeks ago, if you bought it, you would be up 22.2%. If you bought it 8 weeks ago, you'd be up 47.9%. And if you bought it 4 weeks ago, you'd be up 70.9%. So a lot of those gains happened in the last 4 weeks, 4 to 5 weeks. Last week, they were up 10% as it is right now. Bitcoin HODL is 44. That's valued about 1.3 million as it is right now. And then the BTC HODL here, you can see from last June, they had 1,153 Bitcoins, and they have been selling it. And it's been decreasing here every single month for the most part, except for December. They had a little bit of an increase here to 141 from 126. Other than that, it has been coming down here every single month, right? That's one little red flag that I'm seeing right now on it. month-over-month BTC production. This is how much they produce each month, month-over-month. Big decrease here, obviously, in June, negative 34, less 34 Bitcoins less. Here is their BTC production month by month. Their best month was in August of last year, 235, and ever since then they have been coming down, except for May. May had the network fees added into it. That's helped out a lot for them. And then if you look at their BTC sold month over each month, compare it to their BTC produced, you can see that they've been selling more than they are actually producing, which is kind of unfortunate. It's kind of a little bit of a red flag that they're having to do that. But right now we can see that 145 was sold in June. They only mined 139. They sold 206 in May. They mined 173. April, they sold 146. They mined 144. March, they sold 177. They mined 161. In February, they sold 176, mined only 162. January, they sold 184. They only mined 168. And then in December, they actually sold a little bit less, 132 compared to 147. But going back here to November, they sold 210. They mined 198. They sold 578. Obviously, they sold a lot more there in October. As you can see here, October, September, and October, they sold quite a bit here for those couple months just to get by, just to survive the bear market in Bitcoin. Okay, so that's concerning there as well. Their growth is not great going forward either. The 300 petahash will help, but it's not going to be enough. So that's concerning there. I don't know if they're going to be able to survive after the halving event, because once that gets cut in half, now you're looking at, with the continued decrease in hash rate and the, well, decreased production in Bitcoin. If we look at this trend line, let's see it from basically from last year, they did go up a little bit here in August of last year, which I believe their hash rate increased a little bit here. Let's take a look at their hash rate. Yeah, their hash rate increased through that point, and they've been flat ever since August with their hash rate of 2.5 exahash. We can see that, what was I going to say? You can see with them selling it and the way that it's decreasing, by the time we get into the halving event, they're probably going to be down to like maybe 80 Bitcoins a day. And at that point, if price isn't high enough for Bitcoin, being at least 40, 50,000, if not higher for them, they're going to be at, well, half that, about 40 Bitcoins per day. That's going to be really tough for them to survive, especially if their costs are not in line. And we'll take a look at their costs here a little bit. Okay, but there's our hash rate, monthly Bitcoin revenue. It's been up and down here as Bitcoin price has obviously gone up in value over the last couple months. That has helped them out, especially in May. But pretty much flattened out here towards March or April and has come down since then in June. And then monthly hash rate difference, you can see that Bitcoin sold value, they've been selling obviously more than they have been mining. Revenue, so revenue has also been coming down, which is unfortunate, and I'm sure it's going to be, well, this is the revenue. I think the revenue for the current quarter is going to be higher than the quarter Q. Well, this is Q, I don't know. This is Q3 and Q4, so we're still waiting on some data here for them. Last 4 quarters operating costs have come down, which was kind of good here at 5.8 million. Other metrics, let me see here. Q1 Bitcoins, you can see that Bitcoin mined quarterly has been coming down. That's also an issue there. The debt to equity has gotten better, which is good. Current ratio has also gotten lower. So let me see here. Debt to equity ratio higher is better. Current ratio, I believe, it's supposed to be the opposite way. We want a debt to equity ratio lower. We want the current ratio higher, I believe. Okay. Total current assets in millions. Here's Q1 2023 that's being reported at 21, almost 22 million. They have total current liabilities at 22 million as well. So they're pretty much a wash there as it is. Okay. And then as far as their, let's see, your liabilities, current trade, let's see what I want to take a look at. Expenses. Expenses were at 5.3 million. So they might, it's going to be tough for them, but they might just barely survive. They're probably going to have to dilute like crazy to do it, to survive, unless they actually end up growing here quite a bit here in the next, like I said, 6 to 8 months. Okay, but we'll get into this when they provide their Q2 results, hopefully within the next month, month and a half. We'll really dive into all these miners, see how they're doing, see how they are able to possibly weather the halving event coming up next year. Okay, but that's it. As always, the spreadsheet here is available to my Patreon members. Thank you to everyone there for their continued support. Thank you to the YouTube members as well. I'll get you guys all the stuff updated here tonight and into tomorrow as well. And that is it. Let me know what you guys think of all of this, whether you guys agree with this data, whether you don't agree, whether you think Argo is going to be possibly not going to be able to make it after the halving event or not. But that is it that I have for you guys. Okay. Oh, I didn't go into other details. Jeez, almost forgot. Let's go back into it here. Where is it? Screen. Almost forgot. So we did have institutions here. I forgot about this. Institutions stay the same, shares stay the same, but we do have one for analyst ratings or price targets. We have one now underperform. We still have one strong buy, one buy, 3 holds. Price target is still for the high $3. Average is $1.76 now, so that's an increase. Low is $1 from 80 cents, so that is an increase. They're at $2.22 based on the last 3 quarters, current quarter combined. We're looking at PE of 5 with 50% net income. We're looking at $2.63. And then 75% net income from gross revenue at PE of 5, we get $3.94. I think that they are still a little bit undervalued from where they should be. But given that their lack of growth, they've actually gone pretty nicely up in price value here recently. Going forward, it's going to be tough for them, like I said. All right, let me know what you guys think. Other than that, that should be it. Hit the like button, subscribe, helps me out tremendously, and I'll see you guys in the next one.